making money, as we have a conversation that affects nearly every household, and that is financial literacy and debt management. And of course, we bring you this conversation brought to you by Capuchin TV in partnership with Caritas Microfinance Bank, as we join them in celebrating 10 years of empowering households. And of course, we shall be getting to know better about this conversation, that is financial literacy and debt management, just to understand, for example, in an era where there is high rising cost of living, easy access to credit, and of course there is growing pressures of finances, and we shall get to know more about understanding how to manage finances and how to make better and proper decisions when it comes to managing finances. And of course, joining me for this conversation, I'm being joined by Martin Kirimi, who is the head of retail banking here at Caritas Microfinance Bank. And in case you'd love to join us on this conversation by sharing messages of congratulations and how you understand and how Caritas Microfinance Bank has helped you to manage and to know better when it comes to managing your finances, please do not hesitate to reach out to us on 0717 44 866, or you can use the SMS number that is 21760. And also you can leave a comment on our YouTube and Facebook page as we engage in this conversation. But first, allow me to introduce my guest here with me today. A very good morning to you, Martin Kirimi.
Morning to you, Maureen.
It's good to have you here, and thank you for making time to have this conversation.
Thank you so much.
Yes, and congratulations once more, as Caritas Microfinance Bank fraternity marked 10 years since 2015 to 2025 of empowering households.
Thanks so much.
Congratulations for that milestone. And now let's begin with a conversation of understanding more about financial literacy. I don't know, why is it a big deal? Why is financial literacy very important for a retail banking in the era that we are in today? Maybe you can break it down and tell us more about this big picture.
Okay, thank you so much, Maureen. And I would want to also appreciate our viewers this morning for tuning in to this exclusive interview, basically to understand financial literacy. And I would like to say that financial literacy is a very wide area that encompasses a lot of things. One, in terms of goal setting, in terms of debt management, borrowing, in terms of savings and the like. But as a bank, it's important mostly looking at the retail space we are in. And the retail space in this respect, I'm talking about, you know, the individuals who are salaried. We have the individual customers who have turnovers below 1.5 million, and customers also above 1.5 turnovers per year, million per year. And again, also customers within the various value chains within the agri space. That also the bank is empowering. And therefore, when you look at the goal of the government, even to have increase of the financial inclusion within our country, which stands at possibly 83%, then you realize that understanding of our finances is very crucial, basically the knowledge around our finances. So an empowered customer is able to make better decisions in terms of their finances. They're also able to plan for their own growth in terms of their business, in terms of their households, because also we are business, we are a bank that is actually looking at the various households within our country to empower them. And therefore, the aspect of banking starts with someone understanding what are possibly areas they can invest, how can they make their budgets, how can they do their savings, how do they learn to get to understand their income levels, how do they increase their income, their expenses, again, how do they monitor the expenses, how do they also monitor that, so that at the end of the day, we have people that are making prudent choices regarding their finances on a day-to-day basis. Yes.
That's how we talk about making informed decisions when it comes to managing your finances.
Yes.
And as I mentioned earlier on, we talked about understanding how to manage finances has never been more critical when you look at the era that we are in. As Caritas Microfinance Bank, how are you trying to work and improve financial literacy to your customers, especially around the debt management? And maybe you can explain better and shed more light about debt management. When you talk about it, what is it all about?
Thank you so much. As a bank, we are so deliberate mostly in reaching out, first of all, within the Catholic ecosystem, because also the bank exists to also make sure that the various households within the ecosystems are also served well and in the right manner. So we have also a very deep understanding of our ecosystem as a bank and the mandate why the bank was established. And through that, therefore, we have forums within the parishes where, we conduct these free of charge financial literacy classes. Again, we also have the various groups and church organizations where also we meet them in various places and this basically to educate. And the reason why actually looking at debt management, it's also a very rampant issue, not just in this country, but also in the world. But again, looking at how, even as a country is overgeared, then again, it also tells us how the individuals within the ecosystem are so overgeared. That means that most have borrowed a lot. And it's an area that is also causing households to collapse, people really to live above their income levels, and that stretches them in one or the other. We find then that there are strains within the households where kids are unable possibly to school, people are unable to pay their rents, people are unable to meet their, their day-to-day needs. And therefore, the subject of debt management is very crucial. And therefore, as a bank, one of our initiatives is also to empower people. How do we do this? Number one, in terms of debt management, we ensure that at the point where even customers, before they come to apply for loans, the first thing is we provide basic knowledge around their finances. First of all, we don't run into, or rather rush into telling customers to take loans. The first step, in fact, is customers to understand their goal setting. And number two is also these customers to understand the various payment solutions such that they're able to transact from the convenience of their homes, open accounts where they're able to save their money. So we talk a lot about savings even before borrowing. And where someone has a need that exceeds their saving levels, that is when we encourage them now to borrow, but having a need and a goal that also they want to meet. And this goal, of course, must be either a short-term goal or a medium-term goal or a long-term goal, so that then the customer also is borrowing to meet a specific need. So at the point of borrowing then, also now as a bank, we have what we call the credit risk assessment, where we ensure, first of all, that the customer that we are dealing with, first of all, we have done due diligence. We understand the profile of the customer, we understand the business of the customer, we understand the income levels of the customer, and therefore we advise the customer also on the right product to take just to meet their needs. Because every borrowing actually is done to meet a specific customer need. So we don't just lend as a bank, also we are an ethical bank, and therefore as we lend, we also lending to meet a specific need. So we first of all make sure that the customer understands the need, why they are borrowing. And that's why also the bank there's a principle, rather borrowing mechanism that's called Campari, where we look at the character of the customer. Basically, what do people say about the customer? Do they have a good credit history? We also look at the ability. Is this customer able to borrow and also pay? We also look at the purpose of this loan. Why is the customer borrowing? So that at the end of the customer borrowing, then the bank is also to walk the journey with this customer to make sure that the customer does not also misroute these funds to do other things. Because at the end of the day, we say we don't lend to an individual, we lend to a business. It is the business that pays back the loan. So we ensure that the customer understands these simple interests in terms of borrowing, so that then the repayments also becomes very easy, and also making sure that the customer understands the terms and conditions at the point of borrowing. Because again, of consumer protection, we have to make sure that the customer understands the fees of the loan, they understand the amount also they are borrowing, they understand the monthly repayment, so that then every other time as they plan their income and the expenses, the loan repayment is part of the expenses, which again then it's able to be met by the income of this customer. So debt management, of course, is a very important subject as a bank, even to keep discussing with our customers, because again also we have seen instances where customers would borrow, and because of that then their income levels are sometimes depressed, so they are unable to meet the monthly obligations. So what happens? One, they are negatively listed with CRB, so that means then their credit score comes down. So they becomes high risk customer in terms of risk assessment of the customer. So what that means is then to the customer is that anytime they are borrowing, because of the risk price-based lending, then they are priced higher. So that means a same customer borrowing, let's say 500,000, customer A has a very good risk profile, customer B has a low risk profile. So customer B will be paying a higher installment for the same loan because their rate is higher as compared to the person who has a higher CRB rating. So these are some of the things that we make our customers understand, so that also we are able to grow a very good book, a very stable book, where again, because as a bank, we also get into other costs in terms of the provisions, where customers are unable to pay, the bank goes the extra cost. And therefore, because of that, as a bank also, it is our responsibility to make sure that also we educate our customers well, so that the point where they're borrowing, they first of all understand all the things they need to check and to understand in terms of borrowing. And also we have also empowered our staff basically to have a very rich understanding of credit processes, so that they're able to guide our customers. And largely, we'll be empowering our household and living our mission, providing ethical solutions in terms of the financial provision to our customers.
Wow. Thank you so much, Martin, for shedding more light about that. And when you talk about borrowing, no one likes to be in debt, but at some point, everyone has to, you know, borrow money. And being the head of the retail banking here at Caritas Microfinance Bank, what are some of the most common misconceptions that you have, maybe you have interacted with and people about debt? What are some that you have maybe had from the customers, and maybe you can shed more light on that?
Okay, thank you very much. One, I would say in terms of borrowing, people have a misconception that debt, or rather borrowing, is bad. Borrowing is not bad. Borrowing is good. But borrowing becomes bad when people have the wrong reasons why they borrow. Borrowing becomes good also when people understand the very right motive why they are borrowing. For example, we talk about the good and the bad debts. Now, a good debt is any debt that increases the wealth of the customer, rather improves the net worth of the customer. And the bad debt also is a debt that depreciates the net worth of the customer in terms of actually where actually it takes a lot of the customer's income. For example, where someone gets, let's say, a loan to go for an expensive holiday. If you cannot afford it, you know, it's a bad debt. So it's good also for people. That's why we train people to save, so that then some of these things, the luxurious life, you know, they can come out of their savings. So a good debt, for example, is taking like a student loan. You know, you're improving, or rather even when the customer himself is borrowing or borrowing for their children, it is something that is improving their lives in the long run. Someone takes, for example, a mortgage. It's also a good debt because in the long run, it increases also in value. But where someone is borrowing, for example, you know, to go do, like, let's say, gambling, someone borrows to go, you know, buy very expensive kind of shoes and clothing and the like, that's bad borrowing, because even as you look good, it doesn't as such increase you know, your income levels. So one is where people say borrowing is bad. There are people that don't borrow because they fear. So it's all about, first of all, understanding why someone is borrowing, and number two, as you borrow, remember their monthly repayments. So what is the source of your repayment? So once you have a good source of repayment, then you should also be able to borrow because you are living within your means. And number two also, people think, for example, when you have a high income also, it means wealth. Now, in financial matters, high income doesn't translate to someone having wealth. In fact, when you have high income, one should also do savings and also invest, so that then they are also able to improve their way of living. So that in itself then also means then that as people possibly come to borrow, they know that already the money they have invested is also able to pay back some of these facilities. And also there are people that have misconceptions, like when their spouse are possibly negatively listed, or rather they have a low credit score, it affects them. It doesn't. You know, the credit score affects the individual, not, you know, not people, for example, who are married and the like, maybe within a certain within a certain setup. But what I would really love to say is that credit becomes bad also when someone borrows with a motive not to pay, because we have seen such instances. There are also people that borrow, but in essence, they know they are also borrowing this money to take rather to another purpose. So when the purpose is met, what happens, for example, when you're borrowing money, let's say working capital, you have a business, you want to increase possibly your stock, and now you take this money and possibly take it to school to pay the school fees. What happens is that, well, the school fees, the student you're paying for, you're improving their lives, it's good. But the purpose why you borrowed initially, it has not been met. So money that goes to school will never come back to pay for the working capital. So if your business is not stocked, it means then your business will not be able to meet the monthly obligations. So in terms of borrowing, these are some of the misconceptions. But again, I would say it is also good for people to do prudent borrowing. Again, even in terms of borrowing, there are people that borrow to pay other loans, which is also a bad way of borrowing, because you remain, in a cycle, of ever being in debt. So it's also good that once you borrow, just make sure that the intended purpose why you borrowed is met, so that also you're able to monitor the progress of your business. And where there's a challenge, again, you go back and talk to your personal banker, even to advise you to look at possibly some of the things that you're not doing right. And through that, we are going to mitigate also as a bank, helping our customers, to get out of bad debts. Yes.
Okay, and still on that conversation about debt management,
Yes.
perhaps you can break down some of the types of debts that we have, and you can also explain further about the most frequently that one you see with your customers here at Caritas Microfinance Bank.
Thank you, Maureen, for that. I would say basically we have two types of loans. For example, we have the secured and the unsecured. And what you find now within the various segments that the bank has, for example, we have what we call the Insta loans, for example, the mobile loans, where customers are able to borrow from their mobile phones, and that's a product possibly just of 1 month. So someone is able to pay at a very good rate, a competitive rate, and then repay within a month. And number two, also we have loans mostly for the agri-business customers who are practicing agriculture in the various value chains. Either someone is dairy farming, someone is beekeeping, crop production and all that, poultry farming and the like. So we have all these facilities that basically meet customers within the agri-business space. Again, we also have facilities for customers also who are employed. Someone has a pay slip. Also, we have those loans that help the customers to meet their financial obligations, meet their financial goals, because also they are borrowing these monies against their pay slip to repay after a certain period of time. And again, also, for example, now we have customers. We are microfinance bank, and therefore our main aim also is to empower, the low-level income earners, mostly the micro customers that we are saying those are below 1.5 billion turnovers per year. So we have also various products either for people within the groups or for individuals. So, and again also we have the market calls the SME, but here we call it SBE, small business enterprise, again for customers that have a turnover above 1.5 million. So these loans basically you find that they are both secured and unsecured. Secured loans, for example, is where someone is offering a collateral in terms of either land or motor vehicle. On the other side, the unsecured loans also is where basically you just borrow maybe against your stock, and that loan, there of course some of them are short-term loans. So now when customers are also borrowing, you find that they are also borrowing to meet certain needs, and now the bank now looks at these needs to see whether basically the customers qualify, and therefore we are also able to give them basically money that helps them to meet that need, so that we also don't overfund customers, or also we don't underfund them. Because if someone is, for example, borrowing a loan of 500,000 and maybe they want to stock, let's say it's a kibanda, sometimes we may ask ourselves, Is this kibada able to generate a monthly income that is going to pay a loan of 500,000? So we do a risk assessment of the customer credit analysis and just then substantiate whether the customer meets that. So after that, we're able then to say, this is the amount of money we are advancing. So some of the customers, we advise them either to reduce the amount, and some that we feel they're able to pay whatever they're asking for, we also comfortably also give them. So customers come with various needs, but one of the reasons also why we have seen customers coming to borrow is some possibly they are borrowing because they want to do the home improvement. Others, they are borrowing largely. We are seeing a lot of people borrowing, customers borrowing mostly for school fees. They want to further education of their, their children. And again, on the other side also, there are many business and traders that also are coming to boost their business, mostly looking for the capital to boost their business. And again, you see even the construction. There are several that are coming to borrow because they want to construct, and the bank also exists to do that. And within also our ecosystem, we also meet in the various groups within the church where we're able to fund the school buses, we're able to fund even the construction, of the priest houses. We're able to fund the various activities that the parishes have, so that then they're able to empower the households within that community. Yes.
Okay, thank you so much, Martin. And taking you back on a conversation, you mentioned that borrowing is not bad.
Yes.
What do you do, and how do you help your bank, how do you help your customers who are really struggling with debt?
Okay. Thank you. It's a common scenario, not just here at Caritas, but all over. But customers, the first thing is, we first of all assess the credit worth of the customer, so that then we're able to check whether first of all they have the ability. So the first thing is lending right to the customer, so that we say a loan gets bad not after lending but before lending. So if we lend as a bank possibly to the right customer but the wrong amount, that's a bad debt. So the first thing is the right lending. So first of all, we assess the credit worth of the customer, the ability to pay. We check all the parameters just to ensure that whatever amount of money we're giving them is the right money. And again, number two, we also ensure that this customer also understands very well what are the terms of the loans that they are taking, so that they understand the total cost of credit in terms of the principal amount and all other amounts that they're going to pay over and above the principal amount, in terms of the fees, in terms of the third-party costs, for example, insurance, in terms of the legal fees, valuation fees and the like. Again, also for them to understand what are their monthly repayment amounts, so that then with that understanding, as we discuss with the customer at the point of lending, then the customer knows, and we are sure that also they signed against that, they commit themselves into that. But again, on the other side, there is also where the bank uses technology, mostly data, basically to also look at how the turnovers of the customers are, so that then we're able to do a remediation where we find that the turnovers of the customers are coming down. Then again, we're able to visit these customers, we're able to have discussions with them, basically to see how is the business, what are the challenges, what are the interventions that we can do. We also have pre-disbursement visit and post-disbursement visits, where we visit the customers before we do the disbursements and even after, basically to see, we gave you 5 million, maybe for construction. How far is the construction? We gave you this amount of money, maybe to boost your capital in terms of business. How is your business progressing well? So that then we have early interventions to our customers to avoid a scenario where possibly we have a default rate.
All right. As we continue with this discussion, it's very interesting and again very informative. I don't know if you have any advice you would love to send to someone and to all our viewers who are watching us, and they might feel overwhelmed whether by having multiple loans or even card balances. Do you have something that you'd love to clear out as much as our conversation is concerned? Yeah,
thank you very much for that, Maureen. In fact, it's a fact right now. One, because of high taxation and the statutory deductions that are mostly there, and even in business you find now people are paying maybe for higher fees and charges here and there. So that in itself, depletes the disposable income. So my advice to every customer that I would say overgeared, or rather they're much borrowed, they feel strained. One is, first of all, a scenario where someone has much borrowed. The first thing is to stop borrowing. The first thing is to stop borrowing, because the more you borrow, that means that you're sinking a deeper hole. Already you're in the hole, so you're unable to get out of the hole. So the first step is stop borrowing. And number two, then again also I would say that it's also good to understand, first of all, what are these expenses that maybe you're incurring. Just list all your expenses. Seek to understand all your expenses. For example, the loans that you have, list all these loans, because possibly there are customers that, like say, 10 loans, and they don't even understand possibly when some of these loans are going to be cleared. So it's also important to list all the loans and just know which loan is being paid, how much, and by when. And number two, you can also now, list the loans from the lowest, or rather from the highest. There are two methods basically of loan repayment that universally supported. One is what we call the snowball method. Snowball method is where you arrange all your loans from the smallest to the biggest, such that you start now clearing your smallest loan as you go to the biggest. That in itself encourages a person, or rather a borrower, to know that they are making some step towards clearing their loans. The other one is what we call the avalanche method. Avalanche method is where now you arrange your loans from the highest to the smallest. So that means you have more effort, first of all, to clear your big, or rather high interest loans, that now reduces the burden to the customer. So as you also do that, I would say, to the customer is also now good to look at, one, how do you increase your income levels? So also look at other sources of income, so that even as you pay this debt, those are, like, let's say I would say, like more fixed costs, because every month you have to pay. So also look at, how do I increase my income as a customer? So look at other sources of income, so that then your income level increases. And actually, the other things that someone can also do is so to do the loan consolidation. Maybe you have 5 loans. So instead of maybe you're paying the first loan date 1, the other loan you're paying date 10, the other one date 15. So you find that every week of the month, there's a loan that you have to pay. So what you can do is that come to the bank, just talk to your personal banker, consolidate all these loans. Have one loan such that you'll be paying just one installment for the loan. Because in itself also, it helps you plan now your money well, and also to know possibly when this loan is going to end. So through that, then we're able to remedy some of the challenges that our customers have in terms of borrowing. But again, also to say that borrow only when you must borrow. Have a justification why you also must borrow. Yes.
Awesome. And I can see we have some reactions from our viewers who are following us from different parts of the country. We have John Kimono saying, following your conversation. We have James from St. Augustine Parish, Bahati, nawafuatilia sana. Asante sana for the good conversation. We have Mora Vero who's saying that getting you loud and clear. So just some appreciation and reaction from the viewers who are tuning in. Yes, sure. Thank you. And moving on, I understand that Caritas Microfinance Bank, you have varieties and designed very many products for your customers. When we talk about these products and services that you have as Caritas Microfinance Bank, are there some of the product and services that help the customers to manage or consolidate their debt?
Basically, what I would say in terms of loan consolidation, it also depends with the product that the customer is currently servicing. So for example, let's say a customer in construction, maybe you have taken a product for construction. So what happens is, one, because also we have what we call the loan restructuring, and also we have the loan basically consolidation. So for consolidation, I will not per se say it is just a specific product. So what happens is that we have various products. So what happens to us as bankers is, when you come to us as a customer and you realize, one, maybe you have one loan in Caritas, you have another loan with another bank, you have another loan with another bank. So what we advise you then, we look at, first of all, your income levels. So we are able now to assess that and say, this the much possibly you're able to, factor in for your loan. So we can now put all these, the principal amounts together and with the interest that one has to pay, and then say, for example, you have a loan of 1 million here, and all your loans consolidated together, for example, will come, let's say, to 3 million. So what you do is what is covered, it's called the buy-offs. So it is the same loan product possibly that you have, but or rather we give you another, let's say, loan product that accommodates that kind of arrangement then, so that then you're able to have one loan. So we buy off loans from maybe institution A and institution B, and now we put it together as one loan within Caritas that you'll be doing one monthly repayment for this loan facility. So what happens is that it also depends with which product the customer is servicing. So either we use the same loan product to do the consolidation, or we now advise the customer for the best product, again, as bankers now for consolidation. Because again, Maureen, also we have a duty as a bank. We are an ethical bank. So it is also upon ourselves to give the right advice to customers. So when a customer comes and we feel this is the right move for the customer, because at the end of the day, we are living to empower households. So as we empower households, we wouldn't want a customer, again, that is overdated, a customer that has 10 loans to pay within a month. So we advise now customers based on the best product we feel that they fit in, and again, based on their business also, so that then we also delight the customer, help the customer also to live a very prudent life. Yes.
Okay, still on that, maybe how do you ensure customers borrow responsibly and not overextending themselves, as you have just maybe pointed out some of the maybe points on that as conversation
Thank
is
you so
concerned.
much. Responsible borrowing. First of all, someone has, you say, live within your means. So there are people who are excited basically to borrow. For example, it's your first time in employment. And for example, some institutions have put some policies where they're saying, if you're new in employment, you cannot borrow above certain amount. There is a reason to that. Because you realize if you have never, for example, touched or rather handled 1 million. So what happens is that when you get 1 million, you feel like 1 million is quite a lot of money. And so you realize people were sometimes indulge, they make wrong choices in terms of how they utilize their money. So one of the things is to ensure also, as we led, in as much as also we in the lending business, is first of all to advise our customers. And that is why financial literacy comes handy, to make sure so that largely we have guided our customers across board, basically in terms of goal setting, in terms of savings, in terms of borrowing, management of debt and the like. And number two is that also as the customers come to borrow, we ensure that the purpose of their loan is so clear, so that also we're able to review that, work with the customer and have them justify why they must borrow. Someone can say, I'm borrowing for school fees. We go further to say, give us a fee structure, so that then also we know there is a reason that supports the borrowing. And the number three is also, as also these customers borrow, is also that whatever amount also that we give the customers, we also educate them. Just as I said, we first of all make sure that also they understand all the terms of the loans. I'll tell you, Maureen, that there are customers who borrow today and they don't know the interest rate, they don't know possibly the monthly installments. So you realize that it's a shock even to the customer, even they don't know when to pay. And lastly, it's also having the repayment schedule, so that the customer knows I'll be starting my loan from this date and my last day will be this date. There are customers that say my loan, is not decreasing in terms of the principal amount. But again, it's also an education that you do to customers, basically for them to also understand. That's why the loan schedules are very important to customers, to know that within a certain month, my loan will be at this will be the balance. A certain month, it will be at this level. So that in itself, prepares the mind of the customer. Also to know this is a 3-year loan. I'll be paying, for example, 20,000 every month, so they know that then they need also to check their income that should match this, and over and above that, to have some disposable income to use to meet other financial needs. Yes.
Very true. And sometimes there's this slogan that people like to say, fake it until you make it.
Yes.
But I think when it comes to making a decision about finances, you have to be informed. And that's why we're bringing this conversation about financial literacy, so that you can be able to make good and informed decisions when it comes to, managing your finances. Don't fake it, and then by the end of the time and the year, you shall be crying.
Yes, sure.
And Caritas Microfinance Bank is here to help you manage all those and to help you make the decisions, good decisions, and manage your finances. And I understand just from your tagline that says Caritas Microfinance Bank, Toimarisha Jamii, you empower households. How are you reaching to these vulnerable groups when it comes to, the first-time borrowers? Let's talk about the young people, the Gen Zs, and of course they have maybe low-income earners, and to boost, of course, the financial knowledge to young people and to that group.
Thank you, Maureen. In fact, when you look at, the goal of our government is basically to increase the financial inclusivity. There's a lot of campaign within that space. And microfinance institutions basically also operate to make sure that financial inclusivity is increased. You find that one of the biggest challenge why some customers possibly have no formal, rather they are not involved in the formal banking is some maybe they feel like their money is safe maybe under their mattresses. Others feel, like bankers, banks steal their money, like their money is not safe. But I would want first of all to say that, these are highly regulated environment. Regulated by the CBK, regulated by many other, there are many other regulators, and there are many players also, within the banking environment. And we work within a guided framework that the bank must also adhere to. And there are penalties where there are breaches to that. So basically, I would say now we have various vulnerable groups. For example, we have the youths. For example, we saw last year what happened around with Gen Zs. Basically it's a wake-up call, I think, to every institution. And now as a bank also, we have come in ADI, basically also to have tailor-made products that also are able to meet the needs of, the Gen Zs, the youths. For example, you find that right now, social media is actually accommodating so many. There's a lot of innovation around that space. So we have again able to, support first of all in terms of savings products. Number two, for those that again also want to maybe to buy, let's say, cameras to shoot for their content creation and the like. Again, we have also a product that is able now to meet, the needs of these youths. But first, it's say, even before now, we come to funding, what we basically do to the vulnerable groups and even the women. We've also designed a product that meets the needs of the women. The first thing is, first of all, as a bank, we have taken steps to understand what are the needs of the youths. Because again, the dynamics are different. What are the needs of the women? The dynamics are different. So that then we have tailor-made products that meets their needs. And so after that, then after we understand the need, then we just have this product and now we start the education. So now, because Toimarisha Jamii, we're empowering households. And as I said, as a bank, we have fully understood our ecosystem. We have understood the church. We have understood, the dioceses. We have understood the parishes, the various congregations. We understand that. So what we do is that now we speak now to the various needs of the people, the individuals, the groups within the church, so that then the needs that we have identified and the needs also we have identified, as a bank, we're able to come together with them and partner as a financier and also possibly as a borrower. So we're able now to understand our position very well, that we're empowering through offering ethical financial solutions. They are borrowing also ethically after they have also been trained to understand why and what they need to do basically to manage their businesses well. So within all those groups as a bank also, we are able to accommodate them. And even there are people that are not banked at all, I'll tell you. So what we have done to such groups, we identify them, we take them through some form of training so that they're able to understand. One is to gain the confidence that I can trust the bank. They open their accounts, they first of all start saving. After that, then when there is need for them to borrow, we start, we journey with them, giving small amounts as we grow them. So that also we don't just, like you asked earlier, sometimes how do we do to avoid over indebtedness. So we make sure that also we grow the customer. So it's a journey taking them from their income levels as we grow together and graduate them, so that then you also, because our bank has a graduation matrix where we're able to take customers from whatever level and now grow with them as we empower them. You know, as their income levels increase now, as a bank also able to fund them bigger amounts, because also we are comfortable, they have also grown to be able to service those amounts. Yes.
Awesome. And as we continue to unpack on this conversation about financial literacy and debt management, I have a question here for you, Mr. Martin. This is Fred, and he says, kindly, I would like to know what are some of the conditions to top up a loan.
All right, thank you. Top up is basically the refinancing of the customer. In this respect is like, let's say you have already borrowed a loan of 200,000, and as you continue paying at some point, your need increases. You want now, maybe your business requires, let's say, another 300. That means then you don't need to come and take another new loan as such. You just approach the bank and say, I want a loan of 500,000 because maybe my loan balance is 200, and then I'm left with, let's say, I need 300 extra. So that we refinance the same loan. So basically that's a top up. So the conditions are basically, one, that, you know, we assume this customer is also servicing this current loan well. That's a condition. And number two is that also, as you now, because you are increasing your borrowing, basically is also to tell us that now you have also to demonstrate that the new repayment amount, you're able to meet it. So we have also to look at your cash flows and ensure that now if you are servicing a loan of, let's say, of 200,000, let's assume you're paying an installment, let's say, of 16,000. And now you want to take a loan of 500,000, where, for example, you're paying, let's say, 24,000. You know, now that means there's like an increase with a certain amount. So what we do, for example, is that 8,000 that is increasing, then you have to ensure that your income levels, your cash flows also are demonstrated well to ensure that this 8,000 can be accommodated. So, and of course now, you know, as we said earlier, that the need must also be so clear that now I want a top up because I have this need. So we have to look at the need of the customer. We have to look at, you know, how the customer is servicing this new loan, because if you are currently struggling with the current loan, that means then as we increase the amount, then the struggles will become more. And as a bank also, it's our responsibility just to ensure that as we lend, we also don't overburden our customers. But for any top up, any customer can make a top up, of course, once they have also started paying, just to show that they're able to pay. But they must demonstrate that for the new bigger amount, they also have the ability to pay. Basically, once the ability is demonstrated, because the bank had already, you know, appraised the customer, we feel you're the good customer, the bank will definitely provide the facility to you. Yes.
All right. I hope, Freddie, following all the way from G City, you have your answer there. Thank you very much for your question. And as we move on the broader context about financial literacy and debt management, with the current economic climate, what are you seeing when it comes to the shift of the debt management and approach on the borrowing and saving?
Wow, thank you. In fact, I would say that's a very good question. One, economically things have changed, because one, we have seen, you know, like now, after a lot of taxes have been introduced by the government, you find businesses are struggling. Why? Because one, once you increase taxes, those are basically expenses to the customer. So your income levels, that means then, if you have not changed, what will happen is that the customer will feel the weight, because you are expending more than you are generating. So in this respect then, is to say that one, that once customers are unable to, you know, to cope with that situation, or rather because the disposable income then narrows, or rather goes down, it also means then that the customers sometimes have to borrow to meet their needs. So that in itself actually is a risk, because then it means someone is living above their means. I have to borrow for me to live. So then what I would say in this case is that one, we are seeing a situation where borrowing is also decreasing for some customers because now the ability is low. And number two, even in terms of savings, you find that also for some customers, whatever they were able to save per month, possibly their savings go down. And for some even who had saved, Maureen, what you find is that their savings also they now start depleting, taking whatever was in the bank for their, day-to-day usage. So, but what I would say is the discipline around it, such that in as much as now, we are finding the income levels maybe are coming down, we also finding the expenses are increasing. What I would advise in this scenario is let every customer understand their income levels and also seek to improve them. And number two, let them also seek to, check what, or rather understand what their expenses are. Now, there are three things I would want to say that, the three R's I would want to say mostly about that. One is where the customer is able to reduce. For example, reduce consumption. For example, if you realize that every week, for example, you are taking, let's say, chapatis 3 days, you can choose to reduce that to a day in a week, so that then also you don't push yourself so much. So reduction of consumption. Number two is also reuse. Reuse in the sense that sometimes you must not really buy new clothes, for example. You can actually choose to use some of your good old clothes. You reuse them, because that in itself, you are cutting down, your expenses. So I've said, and then you can also, for example, also the other one is I've said reuse, reduction, and also recycle. So these are some of the things that someone can even do, basically to ensure that also they are reducing their expenses. For example, you are in a rented house, you have been paying, let's say it's a 2-bedroom, 30,000. You can get a 2-bedroom possibly at 15,000 or 20,000. You save that 10,000. So I think it's a very sober decision, a deliberate decision that everyone has now to take into consideration based on how now, economically things are moving. So borrowing somehow is affected, and again the repayment. You see, once the income levels go down, it also means the level of repayment also gets down. So that in itself means that more customers get negatively listed on the CRB, and then it also means that the bank has to keep following customers to repay their loans. So the stress levels also increase. That affects the performance of people at workplace, at their businesses, and somehow also affects the unity of the family. So at this time, I would really say that let people come into terms with the realities on the ground, and now, reevaluate what are areas we can improve, what are areas that we can also reduce, so that, again, we don't overburden ourselves.
Okay, thank you so much, Martin. And before maybe I give you some time to do the wrap-up of the conversation, your takeaway point on this conversation today, where is the role of the Caritas Microfinance Bank when it comes to building relationship with their customers in the relation to long-term money?
Wow, thank you so much. Basically, the reason why we are doing financial literacy is to make sure that customers understand, one, that they have a role, they have a personal obligation, basically to manage their finances well. So our role as a bank is, first of all, to educate. To educate because an empowered customer makes better decisions. And number two, again, every customer desires to grow. So for the growth plan, one has to project how they want to grow. So basically, we are basically offering the financial education. We are offering the financing, basically, also to journey with the customer to ensure also they grow. But on the other side also, we are so strong in, again, mobilizing customers to open savings accounts, so that through that, then they're able to save the little they have and grow it. People have also to understand the compounding interest principle, because as you keep putting your money today, as it's rolled over every single month, every single year, it means your money is growing over time. So that aspect of savings, people then have to really save instead of just borrow and use. So that basically helps now customers, to have a kind of long-term approach in terms of how they manage their their businesses, how they manage their relationship in their families, and largely, again, basically to make sure that whatever income they have, they must also not just use it. Some can be saved even for them to use later. And basically, that's why we are saying that in financial literacy, goal setting is very critical. People to understand what is my immediate need. And you see, like in savings, I want to say this. Also, we have 3 kinds of savings that every person should have. One is the emergency fund, the now money. If, for example, someone gets, let's say, a medical issue, it was not planned for. And basically, we say you should have at least 3 times of your monthly income saved for the emergencies. And number 2, it is a goal-oriented fund where I'm saving to buy a car, I'm saving to buy a house, I'm saving to buy land. So that then, in the long run, I'm able to save my money to do that. And number 3, it is also saving for retirement. People must not wait, for example, for when they're retiring, is when they're building or when they're starting about their financial life. You should be saving towards your retirement. So that then at the end of the day, you know that, when you have money, Maureen, there's some level of confidence that comes. And basically, that is what we're doing. As we do a lot of sensitization, a lot of, of education, basically on all these areas, now we are helping our customers to look into the next 20 years. How do they plan for that? And then as a bank, we are saying, we're offering the payment solution. If you want to transfer your money from point A to B, account 1, bank 1 to that, we have the payment solutions. Again, you have an account where you're able to save so that then you also meet your personal dreams.
Okay, all right. Well, and as we come now to the end of the conversation, I'm sure you have an advice you'd love to send to the viewers and, of course, to the customers as far as a conversation on managing debt wisely is concerned. And again, you can also mention on how, the customers can become financially literate on how they can be able to manage their finances and not feel intimidated by banking.
Wow, yes, it is true, because we are coming also from a time where a number of people have not been having the formal instruments, either of transactions. For example, being in a circle, being in a bank and the like. I would maybe start with the second question and say that one, people can build their confidence. First of all, there are a lot of trainings, financial trainings that take place, not just within Caritas, but in several places. People can join those forums, basically to hear whatever is being trained. Number 2, someone can just buy a book around savings, around money management, to understand how can they manage their money. Again, these days there are a lot of podcasts. Someone can, log into a podcast and listen about, financial management and the like. And number 4, is also getting a financial advisor, and Caritas Bank, as a bank as well, trained to basically walk the journey with someone, so that then people are able to understand, because those are some of the misconceptions that people have. For example, if I take my money to the bank, it will be stolen, or the banks, that time, that does not really happen. So a bank actually is a very secure place, So financial advisors can really help. But again, now coming to the other question in terms of, the broader perspective, is also to say, my advice to everyone, and mostly fellow Kenyans, and even the listeners today, is that, debts are good, but also debts become bad if we mismanage them, or we borrow for the wrong intended purpose. Or rather, if we borrow and then we also mismanage what we have borrowed, or we mismanage our businesses. But if we are able to work, and again with our personal bankers, talking to them. There are people today that borrow, and when they are stuck, they actually change their phone numbers. The best thing is this, not to change your phone number. The best thing is talk to your banker. Let them understand your challenge. For example, you are paying 30,000 per month. Now the only amount you can afford is 20,000. That is why we have a solution called loan restructure. A customer can approach the bank, make a request, and the bank can look at that and consider the restructure, so that then the burden for the customer is. So what I want to say is that let no customer run away because they have a debt or fear the debt. We can support them. And largely to say There is a big debate right now in terms of gambling. Actually, it is said that, like in Kenya, people are gambling a tune of 1 trillion. So I would really want to urge everyone, gambling is not a reliable source of income. So let's learn to save. Let's learn to borrow prudently, so that then we're able to meet our financial obligations. And Caritas Microfinance Bank is there again to meet every financial need, whether within the country or outside the country. We are a bank that is able to meet all the financial needs and all the payment solutions. Even if today you travel to the US, you can still use their platforms to transact.
All right, and that brings us to the end of today's discussion on financial literacy and debt management. Here with me, guest, is Martin Kirimi, who is the head of retail banking here at Caritas Microfinance Bank. And I hope you've been able to learn a lot as far as managing and making informed decisions when it comes to your finances. You've learned a lot on that. And mine is to say that remember that when you're dealing with debt, learning on how to save, or even trying to build a better financial future, the first step you take is to help and getting informed. You seek help and ensure that you get informed, and that's why we brought this conversation to you. Thank you very much to all of you who are tuning in the conversation, starting with Mike. We have Sarah. Thank you so much, and to appreciate the Capuchin TV team who were behind the scene. Alan and Diva, we have Anthony Molama, we have Frederick Chieng and Willie Mutua, and not forgetting Peter Mwangi on the other side of the studio. And a very big appreciation and thank you to Caritas Microfinance Bank for hosting us. Thank you very much, Natalie, for making this conversation a success. Mine is to say thank you so much and wishing you a very beautiful day. God bless. See you next time.
We, the Sisters of the Immaculate Heart of Mary, Mother of Christ, we are proud to say that now we have opened the hostel of the Charles Hiri, the hostel for the ladies who are studying around Karen.
Looking for a safe, comfortable and serene place to stay? Are you a lady studying at Tangaza University, Kenya School of Law, Cooperative University, JKUAT, or Catholic University?